Good morning, everyone. Welcome to your weekly market snippets with me, Geoffrey. So I hope you all had an amazing weekend. And as we get to start off this week, we'll start off by looking at what happened in the previous week and how it affected the various markets. Then what we are looking out for this week as we start off from today. So welcome to this market outlook. Starting off, we had last week, we had quite a number of news that affected the various markets, from the Swiss franc consumer price index all the way to the US ISM PMIs. We also had the New Zealand unemployment data come out within last week. We also had the very awaited Bank of England monetary policy statement, which was released also within the course of the week. We saw a rate cut by the Bank of England. Then we also had the weekly US unemployment claims as well coming out during the same week. And also we also had the start of Trump tariffs. Let's get to see the mentioned tariffs and the revised tariffs and how it has also affected the various currencies. So welcome on board, and let's get to it. So starting off, we had the Swiss franc consumer price index. So the monthly change was at 0.0%, and the year-on-year inflation was at 0.2%. So offset effects of diverging price trends, illustrating subdued inflation. Subdued inflation momentum. Then we had the US ISM services, the PMI services. So the services PMI was at 50.1, which is down from 50.8 the previous month. Remains just above the expansion threshold. Then you have the business activity was at 52.6 from the previous 54.2. Then the new orders were at 50.3 from 51.3. Then looking at it from employment, the employment sub index. So we had 46.4, which is contracting for the second consecutive month. So we do have services sector. So the services sector weakened slightly, but still growing overall. And continued labor softness is a caution flag for service-led hiring. Then coming into the New Zealand labor market, the second quarter of 2025. So what do we have from the New Zealand labor market? So we do have the unemployment rate at 5.2%. That is up from the previous 5.1%. Then you have underutilization rate, which was at 12.8%, up from 12.4%. Then you have the employment rate at 66.8%, which is down from 67.1%. Then the wage growth. The wage growth, we had salaries and wages, a positive of 2.4% year on year. Then you have the average weekly earnings, up to $1,679 from the previous $1,612. Then ordinary hourly earnings, we have $43.39, up from the previous $41.52. So showing a very steady economic growth. So the job market for the New Zealand economy softens modestly. However, wage growth remains healthy, helping to underpin household consumption and inflation. So we can see from that data that the New Zealand economy is growing quite well. And now coming into the Bank of England monetary policy. So this has been one of the most awaited monetary policies last week. We had the Bank of England release this monetary policy statement, whereby the bank rate was cut by 25 basis points to 4% from the previous 4.25%, voted by a narrow majority of 4 to 5 members. So the rationale was that the progress in disinflation, especially in underlying domestic price and wage pressure. We had CPI still elevated at 3.5% in the second quarter. So the outlook is that we have vigilant monitoring continues, especially on wage-led inflation and services inflation. So here we've seen that the Bank of England has shifted to a modest easing bias, balancing inflation risks with renewed support for growth. So the Bank of England had maintained their rates at 4.25% for a while, before now eventually cutting their rates to 4%. So will we see the Bank of England maintain their stance at either cutting rates again, or will we maintain the same rates, or probably even hike rates later on within the year? So something to closely observe, having considered that we have started this time with a rate cut. So that is something to closely monitor for all the pound markets. Okay. Then coming into the U.S. unemployment claims, so this is the weekly unemployment claims. So coming into the U.S. Unemployment claims, we had the initial claims were at 226,000, which is a positive of 7,000 from the previous week, which was revised from 218K to 219K. Then you had the 4-week average, that is 220,750, which is down 500 from from prior average, revised to 221,250. So a modest uptick in that, though claims remain historically low, indicating that the labor slack is still limited. Then we do have the Trump tariff measures. So we remember that President Donald Trump had imposed new tariffs on various countries, imports and exports from the 1st of August. Then you had revised tariffs that started off last week across various countries. So let's get to see these countries, the revised tariffs, and how it affects the various products. So here we have the new tariffs. They're ranging from about 10% to 50% across multiple countries. So the top levies we have are India and Brazil at 50%. Syria has 41% tariff. Then you have Laos and Myanmar at 40% tariffs. Then you have mid-range tariffs for Switzerland, 39%. You have Canada at 35%. Then South Africa, 30%. So for Canada has been increased from the previous tariffs. So then you have reductions. So with reductions, we do have lowered rates for some nations. E.g., we do have Malaysia, Thailand, but they're still elevated. So currently we have ongoing uncertainty. Many countries are negotiating for relief, while others face increasing duties and shifting policy signals. So here you can see that the trade policy remains volatile, fueling ongoing uncertainty in global supply chains and cross-border investment flows. So definitely these tariffs are bringing a lot of uncertainty to the various markets. So as we get to see them either in effect or being revised again, then we will be able to see that shift in terms of volatility and also the ongoing uncertainty in global supply chains and cross-border investment flows. So something to closely observe, as we have seen the effect of these tariffs multiple times across various markets. So let's be careful and also be cautious in terms of how we approach the markets on the various currencies by the countries affected. So we have the key themes and market implications. So the tech sector strength, we have outperformance in streaming and AI investments boosts investor confidence. Then the macro fragility in services. So employment softness may amplify the Fed's caution on rate hikes. Then you have the wage resilience in New Zealand. So it supports consumption and inflation outlook in the region. Then you have the Bank of England pivot to easing. So the GBP-linked assets may benefit. Interest rate sensitive sectors get lifeline. So that is in terms of in relation to the Bank of England's rate cut on the pound. Then you have the labor stability in US. So the claims remain low, the weekly unemployment claims, providing baseline support for household income. And lastly, we have the tariff turbulence, where we have it heightens risk across commodities, manufacturing, and global equities. Now coming into the earnings, last week's earnings. So last week we had multiple companies releasing their earnings coming from, we had Disney, we had Uber, we also had AMD, which is advanced micro devices. So let's have a look at that, the various earnings and how it affected also those various stocks. So starting off with Disney, we have the Walt Disney Company. The adjusted earnings per share is $1.61 versus the $1.47, the expected $1.47. So that is quite a good projection. So then you have The revenue is at $23.56 billion versus the expected $23.73 billion. So that is a positive of 2% year on year. Then you have the net income. The net income is at $5.26 billion versus the $2.6 billion expected year on year. Then streaming. So under streaming, we do have operating income turn positive at $346 million. So we had Disney gained 1.8 million subscribers. Disney gained 1.8 million subscribers. Then the outlook, we have it is raised full year adjusted earnings per share to $5.85, which is an 18% growth from $5.75. So what we get from that is that we have a very strong, Disney has a very strong streaming performance, offset slight revenue miss. So the positive earnings per share revisions and robust margins underscore improved profitability despite traditional media headwinds. Okay, so Walt Disney has done quite well. Then coming into the next company we do have is Uber. So Uber Technology, the earnings per share was $0.63, which was in line with the expectations. Then the revenue was $12.65 billion versus the expected $12.46 billion, a positive of 18% year on year. Then the segment highlights, we have mobility gross bookings, which was at $23.76 billion, which is a positive of 18%. The delivery gross bookings, again, which was at $21.73 billion, a positive of 20%. So the net income of the profit was a net income of $1.36 billion. That is $0.63 per share versus the $1.02 billion, which is $0.47 year on year. Then the capital actions, authorized $20 billion stock buyback. So here we have a balanced growth across core segments and strong earnings, coupled with a massive share buyback, and which signals confidence in long-term value. Which signals confidence in long-term value creation. So that is on Uber. Then we do have AMD, Advanced Micro Devices. So the earnings for AMD are as follows. We do have the adjusted earnings per share at $0.48 versus the expected $0.49. Then the revenue is at $7.69 billion, which beats the expected $7.42 billion. So they have beaten the expectations. Then the net income was $872 million. So that is $0.54 per share versus $265 million, which is $0.16 year on year. Then you have the guidance. So for the third quarter, sales forecast are at $8.7 billion. That is a positive of $300 million versus the expected $8.3 billion. Then the innovation side of things, you have the teams up with OpenAI, previewed Instinct MI400, and AI GPUs expected next year. So here you can see solid revenue. Here you can see some solid revenue bits and ambitious outlook for AMD, particularly in the AI space. So the slight earnings per share miss offset by a robust growth trajectory and future readiness. So as we can see, most companies and let's say even the world is moving to a trajectory of AI. So AI is actually shaping how companies are moving and how the technology side of things. So most companies worldwide are embracing AI. And as we get to embrace AI, then definitely it becomes a very key forefront in the technological space. So with AMD becoming a key company, and also now teaming up with OpenAI, then definitely we are seeing these results firsthand. So let's get to observe that. Now, as you get into this week, the week starting off from today, so what are we looking out for this week? So coming into this week, as we start off from today, we have August 12th, that is tomorrow, the Reserve Bank of Australia releasing their monetary policy statement. There we will be having the US core CPI, that is in tomorrow. So starting off the week, definitely, if we will be having the monetary policy statement by the AUD, we will be closely observing, will they be holding their rates? Will they be cutting their rates? Will they be hiking their rates? Then also we will be observing the impact of the release statement on the Australian dollar pairs like AUD, USD, and other pairs paired to the Australian dollar. Then with the CPI, definitely we will be having our focus on the dollar. So, and that is usually to measure the rate of inflation. So definitely we'll be having a focus on the dollar and all pairs that are all currencies that are paired to the US dollar. Then on August 13th, you have the Australian Wage Price Index. So again, seems like this week we'll be having quite a bit of focus on the Australian dollar. Then on August 14th, again, we'll be having the Australian unemployment rate. So seems like this week we'll be having quite a bit of focus on the Australian dollar. Then we have the UK GDP reports. Then you also have the US core PPI, and also you have the US unemployment claims. So this week, for anyone who's probably looking out for the dollar, the Australian dollar, expect quite a bit of some volatility. So let's observe and see how that turns out to be. And lastly, on August 15th, we will be having the US core retail sales. We will be having the preliminary ZOM, consumer sentiment, and inflation expectations. So this week, as you can see, we have quite a bit of focus on the Australian dollar, the US dollar, and also the pound, as we will be having the UK GDP report coming out this week. So as we get to dive into this week, let's trade very cautiously as we approach these markets. Remember, we have Trump tariffs. We have Trump tariffs in effect. We also now have the various fundamentals that you're looking out for this week as we start off the week today. So let's approach the markets very cautiously and carefully. And as we also start off the week, I wish you all a very fresh, energetic, and productive week ahead. Thank you, and see you on the next one.